Well, I'm happy, sad this morning. I'm happy for anybody who was planning to, sell some Tesla this morning at a, pretty good high point since it's up 26 points last time I checked. I'm sad for me because I was hoping to buy, at a bargain, but so far I haven't had a chance. The money might be in my account this morning, but I've been spending my time preparing for you guys. Anyway, we'll see later on whether the money's there, and I'd still be a buyer at these levels. So what's going on? How come we're up 26 points? Well, maybe you've been under a rock for the last 24 hours, but there was about 100 headlines this morning. Everybody seems to agree, that the real reason for the pop is because the new administration is going to push the new transportation department, to quickly set up some rules for autonomous vehicles, thereby eliminating the state by state horrible web of possible regulations that Tesla or other autonomous car companies would have to go through in order to roll out robo-taxis or other kinds of autonomous ride-hailing services. This will be a very, very good thing for Tesla. Now, it can't hurt that Elon Musk was seen with President Trump as his best bud this weekend, traveling companion at various events, flying here and there together that's a good look. It certainly is something that is positive and being, noticed by lots and lots of people. I also think it's going to help, as I've said before, I think it's also going to help just sales generally as Elon's, picture gets in the papers or gets into the news, gets on X, gets wherever it gets over and over again. By the way, speaking of X, he now has 210 million followers on X. How about that? I'm hoping that someday to reach that level. Well, okay, never mind. Just kidding. Okay, some people are nervous about having regulations. My buddy Warren Redlick says, no, we don't want more regulations. We want less regulations. Well, but it just totally makes sense to have a national standard in this particular situation. Dan Ives, he thinks that the street will start taking robotaxi seriously as a result of this statement. And then I've come up with my own rule. I've come up with my own approach. See, we're talking about this is exactly where the Commerce Department should be doing things. Okay, if you have commerce, okay, that goes across state lines, that's exactly what the Interstate Commerce Commission is all about. That is what the federalization of the states had in mind. There are certain things that you want to regulate locally. There are certain things you want to regulate statewide, but then there are things that cross those borders, and you don't want people that are engaged in that kind of commerce to have to make decisions based on crossing a border. It's just not wise, okay? And in this particular case, it would be particularly unwise. So here's my two. It's a very simple rule. This is Elon, you would love this rule. I'm sure this is exactly the kind of rule you'd like to see, not because it's good for you as the techno king of Tesla, but rather because it's simple, straightforward. First principles. Rule number one, companies who plan to deploy vehicles advertised as autonomous must self-certify. They must get that now, self-certify that they're safer to drive than the best human drivers. Right? Okay. The government, in this rule, it should say the government has no method for confirming these statements because they don't. Where are they going to get different data or additional data? Maybe they want to use the data that they're presented by Tesla or others, and then see if they can rejigger the data. But basically, they got nothing, no way to prove or disprove what Elon or other companies will be telling them. So companies will need to provide continuing evidence quarterly. I think that's only fair. It's only right. Okay. Rule number two, companies will be required to take on all liability for accidents caused by self-driving systems when they are activated and or for vehicles that are only possible to drive in self-driving mode. Liability will be limited to $2 million per passenger or pedestrian injured. Again, I just think it's, the companies that do it is going to be the law anyway, but just, confirm it. Just say, okay, it's a rule. If you got this kind of a car, the company's liable. If the equipment is what causes the accident, it's not the fault of the driver. It's not the fault of the owner. It's the fault of the vehicle system, which is produced by, in this case, Tesla, or it could be Waymo, anybody else. All right, so that would be the standard. And why have a limitation? Well, juries, no, this is not good. Oh, well, they're just going to go. You give people millions of dollars for getting coffee spilled in their lap. And anyway, no, you need a limitation. All right, that's it. Now, if you can think of other things that need to be on the list, other parts of this regulation, I mean, I'm sure lawyers, they could easily come with 100 pages, maybe more of additional clauses. And no, we don't need them. Simple. Keep it simple. All right. We also have Tesla dropping lease prices on Model Y. I'm 100% confident that the reason for this is because the demand, Elon needs to use this demand lever, and there's going to be more demand levers that are going to be dropped in order to get to the promised number of 515,000 so that we equal or exceed last year's number. And I just know this is true. AJ has another theory. He says Tesla started to offer globally unprecedented leasing offers for the Model Y, and it makes complete strategic sense. Number one, these deals typically run for about 3 years, the lease deal. Number two, Tesla doesn't allow the purchase of vehicles at the end of the lease. We know this. Number three, this means that Tesla receives back the vehicle and can turn it immediately into a robo-taxi, assuming Tesla can deliver FSD at robo-taxi level within the next 3 years. This is a very long time by Tesla standards. And number four, at present, pre-robo-taxi leases help to maximize volume and then FSD miles. They also help to gain market share, and provide for increased fixed cost absorption. So in other words, if you can keep your factories running full tilt, then that drops the overall fixed cost. Tesla's extremely strong balance sheet can easily absorb significant increasing numbers of leases after Tesla de-emphasized leases for several years. And besides that, they usually bundle these and sell them off anyway. By the way, I happen to agree with AJ in this one, and I would just add one more thing. It really doesn't matter too much what you lease something for that you're going to get back. If you lease it, you could lease it for free. You can send it out for free, as long as when you get it back, it isn't depreciated at all. You understand? If you let somebody have it for 3 years and then they give it back to you 3 years from now, and it was worth exactly the same amount as when you sent it out, you would have no loss. At least if you rented it out for $20 a month, you would have a gain. So the question is, what is the depreciation over this time? And if Tesla's going to just take it back and put it into the fleet, yeah. So anyway, believe me, I've run these numbers before. I've even done it on the channel, and it really is smart to send them out at whatever price you need to in order to jam a bunch of them out there. All right. So that's what I think. So big picture, this significant push into leasing sales can be viewed as a positive sign of Tesla's increasing confidence in FSD turning into a real robotaxi soon. Number two, pessimists will accuse me of, this is AJ still, pessimists will accuse me of being uber bullish, but I think we're about to see real Tesla robotaxis, and certainly within 3 years. This will turn out to be a brilliant strategic move, but some bean counters will complain. The bean counters that do the numbers, believe me, it works out just fine. Now, AJ is continuing his concerns. I would call it almost a fight with Gary Black. Now, please keep in mind that Gary does have C-suite background in product management. And so here's what Gary Black has to say, given that he has that background. He says, follow the problem with many bulls. They believe too much of what management spoon feeds them rather than build their own analysis and investment thesis. That does not mean I'm beholden to a spreadsheet, but one has to understand the consumer decision-making process, competitive positioning of the products, pricing and cost structure, and incremental return on cash investment. All those things are absolutely true. There is no arguing that management needs to do that. Gary's 100% right. I've done it a million times. And guess what? So does Tesla. And so here's what AJ has to say. And I think he's being a little hard on Gary, but it's still true. It says, consider, please, number one, understand the consumer decision-making process is just mumbo jumbo, no substance. How does Gary in Chicago better understand this than Tesla with global data feeds? Tesla, who defeated global automakers in their own game and it continues to do so. So yes, I agree with AJ that there's no chance that Gary has more data and can make a wiser or better decision than Tesla on this. Number two, and now if he had all the data, yes. Two, competitive positioning of the products. Well, have you ever seen a competition matrix, a performance benchmark, or something similar? Has Gary ever offered such a thing? No. He's just talking about regurgitating what some others are saying that might be true or coming up with it like this. Just like, that's what we do, and it's okay. I don't mind Gary speculating. Number three, pricing, the cost structure and incremental return on cash investment. Tesla can measure the pricing action better than anybody in real time. Tesla knows cost structure 10 times better than anyone outside of their building, outside of their data sets that they have available, ever can possibly do. All right, let's take a quick look at some good news and some cool stuff coming out of SpaceX. Glenn Shotwell, I think her title's president at SpaceX, talks about how regulation and regulators can't keep up with tech, especially space tech. Mario Nothal reports this. He's quoting her. Regulations can't keep up. SpaceX flew 96 launches last year and will exceed 130 this year. Compare that to the 10 to 12 launches typical for a space company when the regulatory system was designed. Back then, regulators had a month to license each launch. Now, Falcon launches every 2 to 3 days, and the system can't keep up. Regulators take 5 years to change, slowing technology instead of supporting it. She says, we're navigating this with waivers and guidance papers, but it's clear we need faster, more adaptive regulators that ensure safety and regulations that ensure safety and fairness without stifling innovation. And then Sawyer Merritt has this, also from SpaceX. They're set to break a new 48-hour launch record by launching 4 rockets, including Starship from Texas, Starship from Texas, and then I think it would be other Falcon 9s from Texas, Florida, and California. Twice as many launches as Europe has completed throughout all of 2024 within 48 hours. Warren Redlick in Chasing Dreams says, also quotes Gwen Shotwell. He says, Starlink will add a zero at least to their valuation. That will make Starlink over $1 trillion in valuation. And Starship will generate even more, she says. SpaceX will be one of the most valuable companies on the planet. This is Randy Kirk. Please hit like. Please hit subscribe. Please hit notify. Regular Monday. Brian White in just a little bit. And then, oh no, I'm sorry. I've switched it and it's working. It'll be Larry Goldberg around 5 o'clock or something like that, calling from Texas. And then we've got Brian White around 7:45, 8 o'clock tonight, California time. And you guys seem to like that setup a lot better. There you go. All right. And then, buy your Cybertruck bottle opener. This is the time to do that before I run out. I mean, it could be like those robots that Tesla's selling, the little Optimus action figures. I don't know how big they are. Anyway, they keep selling out. I understand they're back for sale again. Maybe if you have time, you could check it out. You might be able to get one. And then, I could sell out maybe okay. All right. You just need to do it because you'll forget. Okay. And then it's time to do it right now. Market Watch says this morning, according to the Homebuilder Confidence Survey. Homebuilder confidence rose in November as they expect President-elect Donald Trump's victory to usher in regulatory relief and pave the way for more construction. Yay! Sentiment rose for the 3rd month in a row as builders grow more confident in their ability to sell newly built homes. The National Association of Home Builders monthly confidence index rose 3 points to 46 points in November as compared to the 1 point that was expected by Wall Street. And a year ago, the index set at 34, and now it's at 46. So then key details. Home builders were slowly pulling back on incentives to attract home builders. Okay. 31% of builders were slashing home prices, which was the same share since July, but the average price cut was only 5% compared to 6%. About 60% of builders were using sales incentives other than price cuts to improve sales in November, which is down from 62%, just 2% down. Those include offering mortgage rate buydowns, where the builders temporarily offer a lower rate to the buyer for a set period. The 3 gauges that underpin the overall business confidence index were all up. Builders were upbeat about current sales conditions. That rose 2 points. Builders expect an uptick in traffic. That gauge rose 3 points, and they were also more optimistic about future sale, and that gauge rose 7%. This is the Trump effect. Big picture, home builders are expecting a second Trump administration to offer fewer roadblocks when it comes to construction of new homes. This includes a focus on supply-side solutions to housing affordability, including opening federal land for new construction, reducing regulation and tax incentives for entry-level home builders. I don't know about those tax incentives for entry-level home builders. The Trump administration has also proposed tariffs on imported goods, which could increase the cost of building materials. He has also proposed to be stricter on immigration, which could increase labor costs. So those are some of the negatives. What the NHAB said, with the elections now in the rearview mirror, builders are expressing increasing confidence that Republicans gaining all the levers of power in Washington will result in significant regulatory relief for the industry that will lead to construction of more homes and more apartments, according to Carl Harris, chairman of NAHB and a custom home builder from Wichita. But the industry still faces ongoing pressures that limit how many homes they can build, according to Robert Dietz, the chief economist of the NHAB. He said, an ongoing shortage of labor and building lots, along with elevated building material prices, are the continuing problems. Yeah, let's, at some point, we need Elon he knows a lot about the home building business, and we should let him also have something to say. All right, let's go ahead and take a look at what's going on in the markets. And so Tesla is holding up at the high for the day, 26.26. Thank you very much. Anyway, if you're a seller, you're very happy right now. And we've got the Dow Jones down 82, the NASDAQ up 138 on the back of Tesla and a couple of others like Apple's up. Not up nicely, actually. S&P up 18. You've got the Magnificent Seven all up except NVIDIA, which has got that issue maybe this morning with overheating on their new chip. And I'm sure they'll deal with that, and the stock will rebound because their earnings are out Wednesday. And so I'm sure that so what you're seeing here is there was a big dip initially, and now it's trading closer back towards zero. We'll see what happens later in the day on that. And then the Cathie Woods are actually quite strongly up this morning. When I say strongly up, not Square continues up. PayPal is off just a little bit after being up a lot. Okay, let's go ahead and look at the percentages. We've got the Dow down 0.17%, NASDAQ up 0.77, S&P up 0.33. Now we turn to the bonds. Bonds continue to go higher on the yields. The 10-year, 4.451, up 2.5 basis points. The 2-year only up 1.1 basis points. The 3-month up only 0.2 of a basis point. Man, we're getting close. Close. 2-month down 0.3 of a basis point. The 3-month and the 10-year are very close, under 10 basis points at this point, and the 2-month barely over 10, almost exactly 10. All right, it's getting close. We'll see if it re-inverts into a more appropriate setup later this week. Okay, going on to the oil market. Wow, up strongly this morning because Russia-Ukraine tensions are escalating. Yes, we have Joe Biden and Germany agreeing that Ukraine should be able to send long-range missiles into Russia. I think there's limitations on what they can aim those babies at, but Russia's not at all happy with this. And I'm not very happy with the idea that with only a couple of months to go before it'll be Trump's baby, they're escalating. I think this is a really bad time to escalate. This would be a time to, yeah, I don't know. Maybe it'll work. What do I know? Maybe this pressure on Putin will actually cause him to back off. It doesn't seem like it, but okay. So oil up almost $2 in Brent and also Texas Intermediate back 68.84 for Texas Intermediate and Brent at 70, almost $73. Natural gas also up $2, 2.44% at $2.89. Gold rebounding a bunch, maybe also because of this, even as the dollar is strong. Gold continues up at 2,615, up 45 bucks this morning. Silver up 2.77%, even stronger than gold in terms of percentage, and copper up 0.63%, staying over $4 at $4.09. As I mentioned, the dollar is rising. Continues up, up, up. The Japanese are trying to stop this depreciation of the yen, but it isn't working. So Japanese yen, the dollar up 0.3% and 0.275 against the euro, very similar. Bitcoin up 1313 over 90 again, 91 and 91,048. And there you go. That's where things stand this morning. Yeah, I'm going to put up a card right now for yesterday morning's video, which you should have watched. It was a valuable piece of work by me. And so therefore, you should go back and watch. I don't remember what I said. Oh yeah, it had to do with how this robo-taxi thing might actually be, I might have understated the amount of the robo-taxi profit for 2025 by, I don't know, $6 billion. And I'll explain that if you look at that video. I'll put it right up there. Okay, yeah, like, subscribe, notify, and buy some Cybertruck bottle openers, and of course, join Patreon. That would be lovely as well. It's been great talking to you. Gotta find the way to turn this off.